Watching Newsfeed AM, let's pick up on the markets now. The JSE looking set to sustain the green screens from Asia as tech stocks rallied in Hong Kong, including Tencent, up by almost 1/10. Now, this is after a positive meeting between US President Joe Biden and his Chinese counterpart Xi Jinping in Indonesia on Monday. Chantal Marx is Head of Equity Research at FNB Wealth and Investments, joining us now for a quick look at the JSE in early trade. Chantal, good morning to you. Welcome back. Give us your quick sense of the developments this morning at the JSE thus far.
As you rightly said in your introduction, the market really is taking cues from a very positive Asia-Pacific region, really on that meeting with, the meeting between President Xi Jinping of China and President Joe Biden of the US. I think that's been one of the key overhangs from a China perspective, the fact that there's a little bit of tension and really more tension than usual between the two largest economies in the world. Then there's also a stance in global markets that China is going to soften policy against, or policy directed towards the technology shares in particular. There seems to be some intervention coming into the struggling property sector in that country as well. And then, of course, zero COVID, which has done a lot of damage to the Chinese economy, also expected to fade away over time. So all of this has resulted in a really nice push for Chinese stocks and Chinese tech stocks in particular, and that has filtered through to the JSE through nice process.
Yeah, a quick look at the commodities, Chantal. Gold price steadies near a 3-month high, while oil prices are down on fears of lower China demand. Talk us through those developments.
So I think when it comes to gold, it will probably remain elevated as long as we have heightened risk in the system. So even though things are looking a little bit calmer on the markets front, the reality is that there's still a lot of risk. You still have interest rates going up. We'll still have uncertainty about inflation going forward. And then, of course, the geopolitical factors, particularly the war in Ukraine, playing a role here. When it comes to oil, it's a little bit more nuanced. It does seem as if the market is a lot more stressed about what's happening over the next few months, rather than looking through the current demand issues that we might face in the form of slow economic growth in China, which actually happened already and will probably improve going forward. And then, of course, everything else that's going on globally in terms of consumer pressure.
Sure. Let's quickly talk company news. Transaction Capital has published its results and, wait for it, a dividend declaration for the year which ended on the 30th of September 2022. How have they fared in the period under review?
So the share price reaction has been quite negative, but I'm still trying to figure out exactly why. I think that this stock has been doing quite well, and perhaps this really strong print that they put forward has resulted in some profit taking. But Transaction Capital owned We Buy Cars. We Buy Cars has grown exceptionally fast and continues to be a very exciting growth area for them. They also have SA Taxi, which is in taxi financing and salvaging. There they've come under pressure. One of the biggest reasons why they've struggled in SA Taxi is because of the flooding in KZN. The Toyota factory was actually not producing as many minibuses as it usually would, which means that they had less taxis to finance. So that could improve over time. And then they also have a debt collection business that also performed quite well in the period. They did declare dividends, but I think perhaps the dividend's a little bit lower than what was anticipated. But with Transaction Capital, it's not something I would be particularly concerned about. This is a growth business, and any money that they put forward towards growth initiatives, I think will do very well for shareholders in the future.
Let's conclude with Storage Property, which has recorded its interim results for the 6 months ending 30 September 2022. How are those numbers looking?
So also very, very strong growth. They did see a really nice improvement in net rental income, which is a metric that property companies use to talk about what their revenue looks like. They have been expanding quite rapidly, and that came through in that number as well. But even if you strip out the expansion and just look at the existing stuff that they had in their portfolio prior to the financial year, they did exceptionally well. Double-digit increases in net rental growth, as I mentioned. And they also declared a pretty meaty distribution, which I think investors will really enjoy.
Yeah. Chantal Marx, let me thank you very much for that markets update. She is head of equity research at FNB Wealth and Investment.